Okay, folks, welcome to a quick Scans with Bob. We're going to go over some scans on TrendSpider using the Bollinger Band squeeze. That's the mixture of the Keltner channels and the Bollinger Bands, which generally trade outside the Keltner channels. We're looking for opportunities when they trade inside the Keltner channels, setting the stage for a potential high energy breakout or breakdown. So we're going to scan for those. Now, I'm doing a lot of content this weekend because I'm going to Europe this week and I will not be back until the 9th. So I wanted to get something out there. I wanted to get some trade ideas, but I want to put things into context because most of these trades, if not all, I haven't run the scan yet, but most of these trades, if not all, are going to be long trades. We did see some technical improvement in the equities market last week, in particular the triple Qs. So we had a good week, a very good week, and we're looking now for some opportunities, swing trading to the long side. So if I look red, you're right. I was standing outside for way too long yesterday, and I got fried big time. So it is not your screen. Do not adjust your contrast. Do nothing. Yes, I look like Diablo. So let me share my screen. Let's get to it. And folks, before we get into it, I need to do the shout out. And you know what that's going to be. That's going to be a shout out to our friends over at TrendSpider. If you're not currently using TrendSpider, you're missing an arrow in your quiver. I mean, the tool, the functionality is used by institutions using their Bloomberg terminals, whatever other charting systems that they have. Bloomberg's not a big charting software platform, but however, I call this the all-in-one Bloomberg terminal for the average trader, of which I am. So please head on over, take advantage of our 35% discount code, CON35, link below on Twitter. Well, sorry, link below on YouTube, link above on Twitter. I'll get it right someday. And take advantage of their back testing, all their strategy functionality, their alerts, what I like to call if this, then that type trading. If an alert fires off, okay, it met your criteria for executing on the trade, then you could begin bull operations or bear operations or book profits or cut losses, whatever you choose to do with those alert functions. And it's extremely powerful data to have at your fingertips. So please, I encourage you to head on over and take advantage of them. I believe in it so much, I give it away free to our silver and gold level members, to the Contrarian Trader. Right now, though, membership to the Contrarian Trader is closed. I'm switching servers. I had to rebuild the back end, so it's closed. Don't even bother signing up right now. I won't take your money. So that's that. I think I covered everything I wanted to cover business-wise and housekeeping-wise. So I sent out the week ahead commentary to members, and this tool was down. And this is the CME FedWatch tool. I wanted to go over it. It was not up. I received a 503 error page. And I want to have context here because I am talking about getting long of stocks or adding to longs. We're currently long. And I want to talk about the Federal Reserve. And lastly, their balance sheet was basically flat. That's about the second or third consecutive week. So what the markets are hoping for now is that the Federal Reserve will begin, and I've spoken about this quite a bit over the past few weeks. My bet is that they would rather increase the size of their balance sheet rather than cutting rates. It's like a covert way of cutting interest rates. So you haven't heard a tremendous amount of Powell bashing by Trump. Every once in a while he slips, but I think that it's a strategy they have set up to get the Federal Reserve to begin buying our debt. So this is now up. The probability of an ease on the 7th of May is 10.4%. They're not going to cut. Now, looking out to June, 63.3. If anything, since the last time I looked at this, which is Friday morning, this has been reduced now. And when you take a look at July, it's still very high, probability of 92%. So what are they going to do? I don't have a lot of hope for them cutting interest rates anytime soon. I think what they're going to do is that they would rather increase the size of their balance sheet. And we're going to talk a lot more about this tomorrow night on Sunday Night Futures Live. But I will show you a chart of what the Fed's balance sheet looks like. And for those of you that aren't familiar with what this means, it just means that the Federal Reserve financed a tremendous amount of GDP going back to 2007, 2008. Really, let's max this out. I can't believe I have to click max now. To me, 2008, 2009 was like yesterday. But here's where the Fed's balance sheet went from, slowly, gradually building to now booming up higher. You can see they've taken it off the highs, which they should have, but now they are going to reverse this. They are going to begin buying debt. That will reduce long-term yields. Cutting rates does not impact long-term yields. People think that it does. It does not. Think about it. The Federal Reserve cut rates back in September by a half basis point. What did rates do? They went up. So that's on a 10-year, 30-year debt. So by cutting short-term rates, it has really no impact on longer-term rates. So they're going to need to buy back debt. And when you take a look at what they've been doing the past few weeks, we've been going for the longest time now, downtrend. It's kind of begun to stabilize. So by virtue of the fact that they're not rolling off debt off of their balance sheet, guess what? That's one seller that's not out there anymore. What does that allow yields to do? It allows yields to flatten out or perhaps decline. Have you taken a look at yields last week? They declined. We went over that with members on the week ahead commentary. So yields broke down last week. Bonds rallied. That's exactly what the market wants to see. It's exactly what Washington, D.C. wants to see. And it's pretty much what the Federal Reserve wants to see without cutting rates. So, again, I'm setting the stage here for context as to why we're looking to get more long. Now, what is not out of the way is that this is still a very expensive equity market. Very, very expensive. We're more expensive, despite all the earnings that came out last week. We're more expensive this Saturday than we were last Saturday. We're not growing into the multiples. So if anyone thinks that the market's down, the stocks are cheap where they were relative to where they were a few months ago, wrong. Equities are still expensive. That being said, that being known, that doesn't mean that we can't swing trade around this market. When you take a look at the Qs last week, here's the weekly chart. Nice move up, 7.82%, 7.8% on the week from the lows to the highs. SPY on the week, up from lows to the highs, 5.65%. And we made new weekly higher highs. We do have some resistance above. Going back to the Qs for a moment, 470 has been my line in the sand on the Qs. Where did we close last week? 472.56. Close enough for government work. So we closed above resistance. So that's good. Now, that doesn't mean we're not going to pull back and do a retest next Monday, Tuesday, whenever. We should do it. We want to see it. We want to see it pull back, retest 470, and then follow through on volume. on volume. You need to have that volume. Now, volume on the week was good. Here's the problem. Daily view. Volume on the day on Friday was very weak, even though we blew through major overhead supply. So, even more so now, we need a pullback and a retest and then a follow through of this support level at around 470. Now, other names that we have traded, we booked not last week, the week before, Sohu. This was an extreme oversold stock. We bought it here when nobody wanted it, sold it around here, and we were out 4.28% on like a 12-hour trade. Last week on YouTube and Twitter, I posted a tutorial, not a tutorial, a analysis of Rocket Labs, RKKLB, LB Bob, RKLB. There we go. Okay, so on the week, Rocket Labs closed up 14.71% on the week, and I think it goes higher. So this is certainly one, Rocket Labs, that was going to remain on our watch list to accumulate a long position. Now let's do some scans here. The one scan I'm going to do, I haven't done in a while because I haven't been all that bullish on the market, but now things are starting to get interesting again. So we're going to run a couple of scans. I'm going to use the same scan, which is the Bollinger Band squeeze. We're looking for stocks that are poised for an explosive move up or an explosive move down. We don't care which way they go. We just want to see the setup. If we think that it's a short bet, we short it. If we think it's a long bet, we buy it. So let's scan. This scan here is for high growth stocks, rising profits. And we have two setups that hit our system. And this is on a daily time frame. Let's switch over there. POWL, SKYW. Okay, let's minimize this. Let's get rid of this. And let's take a look at our Bollinger Bands and our Keltner channels. Let's get rid of, we don't need volume right now. Okay, so here's the Bollinger Band setup. Oh, look at Rocket Labs has got a Bollinger Band setup. Yeah. So a Bollinger Band squeeze is when the Bollinger Bands in red are inside the Keltner channels. Now, to identify whether or not the stock is going to break out or break down, you want to take a look at your moving averages. Is the stock trading above its moving averages? In this instance here, we have the 20-period moving average. We're trading above it. 5 periods above the 21, 10 days above the 21, 5 periods above the 10. So therefore, the moving averages are stacked. Therefore, the probability of a breakout is very likely. Plus, momentum is building, higher lows. I think this is going to move up a lot higher in the coming weeks. Rocket Lab, bullish. Now, going to those two scans I just pulled, PLW, Powell Industries, daily view, very tight Bollinger Band setup. Let's take a look at what it looks like on a weekly view as well. Good setup here. We have higher lows. And last week, we broke out. What I want to see here is a pullback down here at a bare minimum to around 160. Let's bring that up a little bit. 163. I'm good there. 163. I don't like the color of this line. There we go. That's better. There we go. There we go. Much better. Okay, good. The aesthetics of the chart have to be right. Okay, so what I want to do here is I want to create an alert. I want to know when we touch that support level, and that will be my buy signal. And we'll keep this active for a couple of weeks. So our alert's set, good to go. So that's 2 in the can we have for this coming week. Let's take a look at seasonality on POWL. Seasonality going back, wow, this company's been around a long time. 35 years of data. April's not a great month. May is on par with December of being the best month out of the year. Awesome data to have here on POWL. And then when we take a look at the weekly view, these next couple of weeks from a risk reward perspective look very, very good for POWL. So if we get a pullback next week, this one is going to be in our portfolio. So bullish on POWL. Eventually, I'm going to get that right. Let's see if we have any insider buying or selling. Back in December, some selling, but you're seeing some awards, but they're not dumping. So they're holding on to the stock. So I'm going to view that through the lens of optimism. Options activity. A lot of short-term options being traded. Something happened back here. We have 200 calls. Somebody bought the 200 calls. We closed at 186.60 going out to November 2025. 447,000 in premium they paid. So somebody believes that this stock is going a lot higher. I'm sorry, there's actually 2 tranches. We have the 200 strike is 886,000 in premium, and the 210s are 85,000, nearly 86,000 in premium paid. So some bullish activity going on out and into November. So bullish, POWL. The next chart up, Sky West. Let's go to the daily chart first. Let's use up the auto Fibonacci's. We have a little bit of reason. Well, we actually closed above. Yeah, we closed slightly above it on Friday. Do we have overhead supply here? We do, but it's not heavy. You got a lot of overhead supply up here. You have support weekly time frame down here. So we're going to take these off and we're going to map this out by hand. So we have a breakout on a daily chart. I would not call this a Bollinger Band squeeze, though. It's the beginning of one, really. It is technically, but really you want to see the neck of the Bollinger Bands really tight, very similar to what we saw on POWL. See how tight the neck is here? That's really what we want. This is really just the beginning of a Bollinger Band squeeze. So this could trade sideways for the next couple of weeks. But we did break out. We broke out on the 23rd, retest 1, retest 2. We could easily get follow through. Let's check out the weekly chart. We broke out on a weekly time frame as well. Again, let's change this color. Okay. Let's check out the seasonality. For the next for April, it's April's almost done. I mean, for the next couple of months, not great seasonally. I think the stock is just something that you put on your watch list and watch it right now. Revisit it from time to time, but I don't think I would be a buyer here. I mean, you go out a couple of weeks seasonally, going back 19 years, in a couple of weeks, we really have some rocky moments coming up. So I would not be if you're going to nibble, fine. If you're going to be an aggressive buyer, I would think twice about that. So seasonality, not wonderful here. We have a breakout on a weekly chart. That really means nothing until you get your pullback and you get your follow through. So I'm not enamored with SKYW as I am with Rocket Labs and POWL. Let's go back to the scanner and see what's happening on, I'm going to use the same scan. I have two monitors open. It keeps clicking on my other monitor. There we go. Okay, let's do, I don't want to do the S&P 500. I want to do, let's do the IBD 50. These are the top rated stocks on Investors Business Daily. Let's see what happens here. We're on a daily time frame. Let's stick with the daily time frame. Actually, this is not a daily time frame. There we go. That's better. And we want perfect. Let's see what we get. And folks, while we're waiting for, there's nothing that came up. Let's go to the NASDAQ 100. Okay. All right, so we have a couple here. Let's take a look. Let's see what's going on. Let's get curious. And if you join up for TrendSpider, you need this scan, just let me know. I'll send it to you. As a matter of fact, I can share this. Here, I'm going to put this in the chat just in case you want it. It's free. I'm not looking to make any money on it. Why can't I paste? Why can't I paste? Chat. Is the chat off? Strange. It's not letting me copy and paste it. If you need it, email me, Robert at the Contrarian Trader. I'll send it out to you. I'm not sure why it's not let me paste. This is the live stream that software that's not functioning properly. I can do it on YouTube, though. That I can do. Yeah. Where there's a will, there's a way. If you're watching this on you, yeah, I'm not getting any comments. Hey, Corey, I didn't see you left a comment. The software is not working properly. RL, Thank you for that. Thank God I checked YouTube. POWL earnings on 5/6. Thank you for that, RL. Good data. All right, so let's check in. We have VRTX. All right, so here's the Bollinger Band squeeze. Bollinger Band's in red, trading inside the Keltner channels. Really, really nice setup. We'll come back to the daily chart. Let's first take a look at the macro, the higher level view. I mean, VRTX is almost back to all-time highs. Let's go to a monthly view. See how we're poised to close out the month. Pretty good. Pretty good. So what we want to do is we want to take our crayon out, because I'll tell you right now, we close above 520 per share. There's going to be a rip your face off rally here on VRTX. So I think that's price target number one. We closed at 493.84. So we have a little bit of upside potential here. I'm looking at a call spread here. That's when you buy an in the money call option, simultaneously sell an out of the money option. And if you're familiar with the deltas, if you're wondering what the deltas I would use, I would buy the 70 delta. I would sell the 30 delta out of the money call option. That helps finance the trade. That's how I would trade this. I would definitely go beyond a 520 strike on here. If you're going to go longer term, if you're going to buy 180-day options, leaps, I would go out further than the 520 strike, because you don't want to miss out on the upside potential here. I think that this stock is going a lot higher. Bullish on VRTX. I mean, take a look at this setup. You have an inverted head and shoulders setup. Head, left shoulder, right shoulder. Where's the neckline? Right there. You have a higher low. This thing's just getting ready to rip your face off right now. The shorts, it's getting ready to rip shorts face off. And plus, you have a Bollinger Band squeeze setting up. I would like to see this a bit tighter. We may not get our way, but this was a good-looking chart here on both a weekly time frame, daily time frame, and hell, throw in the monthly time frame as well. Good stuff. XCL is the next one. Energy stocks, I'm not loving right now. I'm not feeling it, but the scan brought it up, so let's pay attention to it. This looked like a good squeeze setting up back here, even back here. And in fact, we had one and it fired off and it dropped back down into a base. I don't like the sector right now. The energy stocks are back now correlated with oil. Oil was down last week. I think energy was down as well. Let's bring up XLE. It was actually up last week. I stand corrected. That's why I check. Not to be arrogant. We want to be fact-based. So energy closed up. Oil closed down. This may show the closing off of its lows, but it closed down off of its highs. So yeah, it's off of its lows. I'm not loving energy stocks right now. I own one, XCL. Yeah, on a weekly time frame, you have a lot of topping tails. It's worthy of us getting our trend lines out or our fibs. Yeah, we're having a struggle getting through the 70.91, a retracement level on the fibs. At best, what you're seeing is a triangle formation. We're at the apex of that triangle formation. It's either going to break out or break down. It's trading above its 20-period moving average, which is bullish. I'd wait for the breakout. Here. Show me a breakout above this mark. I don't want any sensitivity. and I'm a buyer. And we'll keep that active for a couple of weeks. And these are only trades, not investments. I don't know enough about them to be investments. Let's try to do one more scan here. And let's just take a look at let's just do the S&P 500. Now, First Solar, we already went over XCL. We did Vertex. SMCI's on here. CME, that's already had a big rally. FSLR, they're going to benefit from the tariffs. They broke out last week. This is the auto fibs, Fibonacci retracements. If you don't know how to draw them, TrendSpider does it for you. Nice Bollinger Band squeeze here. I like this setup a lot. Before we fall in love with it, let's make sure we are in a solid base or an uptrend. We are not in either. We've had a nasty sell-off here. A very tight descending wedge formation. Momentum is measured by stochastics, pretty oversold. Oh, this is a monthly chart. Sorry, folks. I stand corrected. Monthly chart, but still, same analysis. Descending wedge formation, Stokes oversold. The weekly chart's looking the bomb here. They're looking really, really good with Stokes now hooking up after being oversold. Price action near a breakout point. I want to know when we break out. And we'll keep this active for a few weeks. Let's check out seasonality. So, you can't have everything that you want. Going back 18 years worth of data, April's an okay month. It's a coin flip month. In my book, 53% are. It's not great odds. We want up in the 70s. Next month, May, is by far the worst month out of the year going back 18 years. So no great rush here. This is truly an if this, then that stock, meaning if it doesn't break out, I don't want any part of it. So we have our alerts set here. There they are. My Rocket Lab's fired off. Let's go to the daily chart. I think that we're going to break out, but then I think we're going to drop back down and we're going to retest the weekly support level. I think we're going to do we can have a rip your face off move up higher. Then we're going to drop back down, retest. And then after all of the week longs are finally out, then we're going to move up higher. So bullish on FSLR. Let's take a look at SMCI. That's trying to break out. They filed their SEC paperwork finally. Now, here's the Bollinger Band squeeze. You have the Bollinger Bands in red, Keltner channels in white, and we're trading above. We broke out last week. Stokes are rising. We went from a high of around 66 bucks a share. We're down. We're down by nearly 50%. So if you loved it up here like everybody else did, you got to love it down here. I mean, my God. I remember we went short back here. Actually, it was back here, not here, here. So that's SMCI. And that's it, folks. Those are our stocks. SMCI, Vertex, VRTX, POWL, Rocket Labs, and FSLR. Thanks for being here. Don't forget, join us tomorrow night, 6 p.m. Eastern Standard Time on YouTube, Twitter. Like, subscribe, you know the deal. And don't forget about our friends over at TrendSpider. Get that 35% discount. Use the link below, discount code CON35. If you watch us on YouTube, again, link below. On Twitter or X, link above. Everybody have an awesome remainder of your weekend. Have a profitable trading week. Hopefully, I'll see you tomorrow. Be well.